Hello everyone, my name is Danny. In today's video I'm gonna talking about the risk management based on the human behavior. I'm gonna go into the 21 bad behavior in the trading, and it's really hard to quit this one. I understand it, but we need to control them. Sometimes I'm doing the same thing too, but you need to put it under control. Under this channel, we're talking about the reality. We not sell the dream to you as a coming as a has show you the luxury car and the trading the car, make it 2,000, 3,000 per hours, or make it 10,000 and such as those information you can see as advertised on the everywhere. We're not gonna sell that one to you, and it could be happen, but you should be keep it up in the market and build up your account first. I never say that this is not happen to have a big luxury house and a big luxury car or sort of the thing. It could be happen, but for the normal person that is has a like a, for example 10,000, 20,000, 30,000, it couldn't reach to the million dollar on the overnight. That is not trading strategy. As much as you win, you're gonna lose too. You should think about the other side as well. Everything on the trading could be happen. You can get a good account balance and good income from the trading, but you need to manage your risk at first. You need to learn about how to manage your risk in advance. First thing that is like a lot of traders doing it is FOMO, fear of the missing out. That is worst scenario that could happen for each person, to open the position based on the FOMO, because market is pumping and is out of your strategy, because everyone buy it, you gonna buy it too. That is gonna kill your account balance. If you control the FOMO, that is one of the most thing that you can do for yourself. The second and worst thing about a lot of amateur trader, they don't put any stop loss on the market. For example, they buy something for hodling. They buy it $100 and they lost 20% of this one. It's still hodling because of the hodler. That is completely wrong. Doesn't really matter you're doing the spot trading or you're doing the perpetual trading. Lost is mean lost. We have a lot of coin coming and after like a while reach to the zero. They're pumping million%, but going back to the zero again. That is completely wrong. To don't have a stop loss, especially for the perpetual trader. If you don't do the stop loss and you're doing on the cross margin, you're gonna be blow your account in the one trade. When I started, because I don't want to lose, I lost more than 50% of my account balance with the one trade only, because I didn't put a stop loss and I've been margin call and I lost the 50% of my account balance because I didn't put a stop loss. Please do it so. Lost is mean lost. It doesn't mean to be going for at the margin or when you lose a one trade. Nobody have a 100%, even more than 80% winning on the market, except smart money. Please put a stop loss. It's really important to have a stop loss. The next one is gonna be overtrade. Overtrade is one of the a worst scenario. It could be happen for the trader, especially for the professional trader, because overtrade, they give the trader confident you're gonna be good trader. You need to make a lot of money with your margin, and this one is gonna be below your profit that you make it. Be realistic about the market. How many a trade can you manage it every day? We need to find it out from yourself. My one is between 5 to 7 maximum, but if somebody do the part-time or a couple of hours, it could be less. Don't do overtrade. Overtrade is gonna be kill your profit. We are here to get our profit and our share and go for the next day. We are day trader or swing trader, but we're not gonna kill our profit. The next one that I'm gonna talking about, emotion, is very related to the FOMO, but it could be different because of the personal behavior sometimes, because emotion is gonna kill your account balance. It's very hard to don't have an emotion on the trading, but you need to control your emotion when you are doing trading. You need to see the technical analysis, or you need to see based on what happened on the market. What's the sentiment of the market? Don't involve your emotion when you do the trading. Next one that I'm gonna talking about, revenge. That is really important for if you wanna trading. Don't do the revenge for the market. If you wanna trade every day or every week, don't do revenge for market, because we are not big player on the market only. If you want to play with your money, do the revenge trading. If you lost something, you lost. If you do the risk management, it's been fine. You're gonna be build up account again in the 1 week or 1 month if you do the risk management. Revenge for the market is so dangerous. If you want to revenge, your account balance is gonna be 0. It's another bad behavior for the one trading, because based on any knowledge, right? the predict the market, even with a big technical analysis and fundamental analysis, you can't predict the market. For example, Bitcoin is 20,000. Don't say or don't predict that Bitcoin is gonna be tomorrow is gonna be 21,000 or 40,000 or whatever. That is gonna be effect on your emotion and effect on your decision. That is really dangerous for you getting through the some of the trade that is not good for you, and they're gonna be below your account balance. The next chapter of this risk management based on the human behavior is trading without a strategy or discipline. That is mean, for example, I'm in the trade and without any strategy or without any technical analysis or fundamental analysis, I'm gonna open the position without any technical analysis. For example, I'm gonna go in for this example. I have an alarm in my trading view, and I'm gonna put it under this level. The price is not important because this level is gonna be good potential for me to open the one short trade. That is mean you have a strategy for your trade. This part is my strategy based on the technical analysis and based on any indicator that you can get a confirmation from it. You're gonna be open the position, and I'm not gonna blindly, for example, open the position under this area, because first thing, I'm not gonna get my risk reward ratio, and I'm not gonna get my target as well, and potentially I'm gonna get a stop loss. That is really important to understand this one. Another thing that I'm gonna add it to this one is complicated strategy. That is mean just make it simple. For example, you can't have a 10 indicator, 20 indicator on the chart and make a decision on those one only. You getting lost between the indicator and price action. For my strategy, I just have a view up in my strategy. I just only indicator that I have. I have a one indicator on my chart, and I have a two oscillator. One indicator plus two oscillator. That's it. I just make a decision based on the price action at first, get a confirmation from the oscillator only. Another thing that I'm gonna mention, a lot of traders change a strategy every day, every week, because they are not considered that is work. You need to get a back test or forward test for your strategy. You have to, for the one trade, you can say your strategy is not working. None of the strategy is 100%. Another thing that I'm gonna mention it, a lot of trader, when you do the one test the strategy, they are just tested in the backtest only. But I'm completely disagree with the backtest because we need to get a forward test for this strategy, because we are trading the future, not in the past. The next one I'm gonna tell you, if you are not trader, you can't trade on the market. You need to get a knowledge and education before start to trading. The next one I'm gonna tell you, you need to record your mistake and your profit and the losses on the Excel sheet, and keep it in the record, because it's gonna be help you in the future. Don't do this mistake again. The next thing that is essential for you, you need to have a checklist before getting to the trade. For example, I'm gonna open the position. I need to get a confirmation based on the price action, and they get a confirmation from the volume spread analysis, and plus 2 indicator or oscillator that I use. That is basic. You need to write it down on the one of the sheet, and write it down on the notebook for yourself. Check it before open any position. Another thing that I'm gonna mention, a lot of traders, include the amateur or professional trader, change a stop loss. That is completely wrong, because you had a plan to get into the trade. You need to stick on your strategy, and if they do the risk management, you're gonna get a stop loss. And if you change your stop loss every second or every day, or because the price reached your stop loss, you're gonna lose more than win, because they're gonna change your risk to reward ratio. Another thing that I'm gonna mention on this video, a lot of traders doing this one, include myself. Close your position early, because you see there's some number in the profit that is unclaimed profit, or you're gonna close your position because you see that, for example, if I take it now, I'm gonna get $100, but you're gonna get $100, but this one is gonna be habit for you to do it every day, that's all. And this one is gonna be in the long term, is gonna be effect on your risk reward ratio. I'm 100% agree with the risk free after get some profit, because the market could be going opposite direction, and you're gonna be a stop loss. It's better to, after get some profit, depend on your strategy, still make it risk free, and put a stop loss in the break even. Another thing that I'm gonna mention, you need to double check everything before open the position, such as your leverage, such as your margin, such as cross and isolated. This is gonna be habit for you, because if you're not doing that, so it's potentially you're gonna lose the trade. one time I'm getting liquidated because I didn't mention about my default leverage on the exchange was 30, but I'll forget to change it to the 10. Another thing that I'm gonna tell you about the trade more than your risk. For example, your daily losses maximum is 3%. If you risk more than 3%, going to the 5 or 6%, and you build up your losses the first time, second time, you're gonna be in the long term is gonna be destroy your account again. Listen to the everyone is one of the most important part. If you have a strategy and you are confident on your trade, you need to listen only to yourself, not anyone else. If the Mr. X going for the long and you are on the short, it doesn't mean to be he's right and you are wrong. Just do it whatever you do. Trading, you need to focus on the something. If you are not under a stable condition, such as you drinking or you are have a frustration or anything else, this could be happen in your life, you are not allowed to do any trading, because this one is gonna affect on your trading. Another thing that I'm gonna mention, greed in the market, because a lot of people in the market working in this market has a lot of greed. They never take a profit on the certain time and never take a profit based on the plan, and still they keep it unless to become as a stop loss. On the other part, we have a fear to lose the profit, fear to open the position. I'm going to mention about the fear to open the position, because sometimes if you have like a stop loss a couple of days or a couple of trade before, it's really hard for you to open the position based on your fear. As much as they meet up all of your condition that is you are open the position, still you have a fear to open the position. It's better to control your fear. If the condition is met on your strategy, open your position. Try to avoid the martingale strategy, because this one is gonna be blow your account balance. If you don't know what's the martingale strategy, I'll leave a link in the description. Sorry about the inconvenience, the video doesn't have that much quality. The martingale strategy is gonna be destroy your account balance. If you do it so, you're gonna be broke in the less than month. I'm assuming that is not good strategy. Martingale is completely broke strategy. Don't do it. But I have a condition for my is not kind of the martingale strategy, but my position mostly I'm gonna do this one. I'm gonna go in for my Discord channel and show you what's my strategy. I have this one have a Doge on the short condition. I have a plan for the price reach the 13 cent and the 13.5 cent. Those one is not that much far from each other, but I'm gonna open the position if my strategy was to open down the 13 cent and put my 1% of the daily risk on the one position. I'm not allowed to open the next entry too because my maximum daily is finished. But I can do the one thing. I'm gonna be a little bit realistic and put 0.5% on this strategy, this entry, and the second entry is gonna be under this one. 0.5% on the first entry, 0.5% for the second entry. If the price doesn't reach to the second entry, it's fine. We're gonna go in for the 0.5%. We're not gonna get all of the profit all in the whole market. We should be a little bit realistic about the market, what our position in the market, and what we're gonna get. But I'm never change my stop loss and going for the martingale strategy, because a stop loss is a stop loss. It's completely fixed, and I'm never going more than this one, because I used to go in there and do this martingale strategy, and I'm blowing my account balance. Thank you so much for watching, and stay until the end of the video. I hope so you're gonna be successful on the trading. I'm gonna go in for the 2 more parts for the trading strategy and the risk management. If you added value to you, please smash the like button and subscribe to my channel. And follow my Discord channel if you like. You'll learn a lot of things over there too. And see you next time, guys.